Hello and welcome to another video on how to secure yourself financially. So looking at the sec.gov website, the Security Exchange and Commissions, where they have this section when here I gain some basic understanding and how to read basic part of financial statement that allow me to make sense, especially when I'm able to see a set of financial statement. And we have this four type of financial statement, and after all, each one of them, what they do is show you the money, right? So from the Cuba Gooding Jr. immortal lines from Jerry Maguire movie, show me the money. That's what financial statement do. They show you the money. And we have balance sheets. It shows what a company owns and what it owns at a fixed point in time. Income statement, how much money a company made and spent over a period of time. Cash flow, the exchanging money between the company and the outside world, as well as the statement of the shareholders, which shows the change in interest over time. So the TLDR of the balance sheet is a snapshot of the company assets, liabilities, and shareholders' equity. The TLDR of income statement is that this is a statement that shows you if a company made or not profit. Okay? If a company made a profit or lose money. And the cash flow statement report is the company inflow and outflow of cash, which is something important for companies to have cash on hand to pay its expense or purchase assets, where this cash flow statement it outline or is the bottom line of the cash flow statement show you the net increase or decrease in money or in cash. And this is generally review the cash flow from one of these activities. This financial statement review the cash flow from one of these activities, the operating activities, liabilities, and the operating, investing, and financial activities. So the first, what it does is to look at and analyze the net income for all the net income from the income statement and conciliate with the total amount of cash that was used or perceived by other operating assets. Operating assets, or the most common operating assets, are I'm going to recap this. The operating activities, which is the first part of the cash flow statement, review is and analyze the net income from the income statement and conciliate with the total amount of cash that was used or perceived from operating activities. And the most common operating activities are operating assets and liabilities, where on the first operating assets you have things like property, plant, and equipment, accounts receivable, prepay expense, such as premium insurance, marketing, rent, software license, or maintenance contracts, intangible assets like patents, trademarks, copyrights, as well as goodwill, trade secrets, customer relationships, investment in affiliates like joint ventures, equity investments, limited partnerships, associates, as well as the cash flow or cash in cash equivalents, like money market funds, especially for funds that invest primarily in very short-term financial debt instrument, such as bank acceptance, very short-term debt issued by banks, certificate of deposit, a savings certificate with short-term maturity issued by banks, commercial papers, unsecured corporate debt, the repo, the repurchase agreement, which is very short-term debt issued by governments. So once I look at the most common operating assets, and now looking at the most common operating liabilities, like accounts payables, deferred revenues, accrued expense, income tax payable, short-term borrowings, notes payable, which is an agreement between the borrower and the lender where the borrower issue all the terms and conditions of that loan, such as bank loans, or business loans, when now companies ask for loans to financial institutions like private equity or venture capitalists, bonds, where now company and business issue bonds to raise funds. When they generate is this notes payable that outline is all the principal plus the interest as well as the repayment or the payment interest schedule. We also have these trade loans. This is, for example, if you want to, in some case, some company can renegotiate its repayment schedule with vendors and suppliers. Notes payable directly, which is when a company or a small business or individuals ask to lenders for a loan. So it generates this notes payable. Also installment loans. So business or corporation that they want to purchase some assets and repay that in the long run. So it generates this note payable. So with that, okay, so with that, okay. And then I also look at the warranty obligations, which are obligations that a company have to fix or replace that defective product or product that doesn't meet certain quality standards. Okay, so you have manufacturing warranties, service warranty, parts, vehicles, home. So with this huge overview of the most common operating assets and liabilities, this is exactly what these operating activities, which is the first part of the cash flow statement, conciliate. So it analyzes the net income and conciliate with the total amount of cash that was used or perceived from operating activities. Okay, operating assets and operating liabilities. All right. And the way to do that is, well, first, it adjusts the total amount of cash that was used or perceived from it conciliates the net income first with the total amount of non-item cash. So cash that affects the state or the income statement that there are not any cash involved. So for example, you have is amortization or depreciation, as well as uh, stock-based compensation, right? So that kind of thing. So okay, cool. So because with that, then this is one way to conciliate that, right? So what it does is to look at the net income from the income statement and conciliate and adjust with the non-cash items, and then it look at the total amount of cash that was used or perceived from other operating activities. Okay, and when it comes to the investing activity, which is the second part of the cash flow statement, here investing activities. All right. Uh, what it does is to analyze the cash flow from investing activities that generally involve is the purchase or sale of long-term assets, assets like intangible assets, patents, copyrights, trademark, goodwill, customer relationships, uh, property, plant, or equipment, investment, whether it's stocks, bonds, or any other investment, uh, as well as leasehold installment, which is extents of your own rent or your own property, for example. So this is just example of long-term assets. Okay, so long-term assets. Okay, this is just example of long-term assets here, like property, plant, and equipment, intangible assets, investment, goodwill is another, leasehold improvement made to a leased property, such as renovations, alterations, or additions to better suit the company needs. Okay. Um, so this is the investing activities. Okay, it generally involves is that. So, for example, if a company purchases a equipment, this activity is registered as a cash outflow because cash was used to do that. But however, if a company decide to sell some of their investment, well, this activity is registered as a cash inflow. And now from the financing activities, okay, where this involved is the company's long-term liabilities and equity, meaning it involved is the company long-term obligations and ownership. Okay, so, and this is very very important to understand these financial activities. So anytime you receive some financing, again, according to ChatGPT as well as this financial activity and Investopedia, okay, so anytime you receive funding, okay, this involves the company's obligations or the company's long-term liabilities and equity ownership of that. So once you understand this, all right, now you say, okay, because this is what is supposed to happen if I receive some funds, let's say you ask a loan for a venture capitalist or on another financial institution, private equity, so on and so forth. So once you receive that, you have now an obligations and ownership involved in that. Okay? Because at the end of the day, they want a share of that. Once I look at the financial, what the hell, financial, the beginning, I know, the financing act, you got it. That's right. From the cash flow statement, okay, where Investopedia mentioned that the financing activity in the cash flow statement focus on how a firm or a company raise capital and pay back to investors through capital markets. All right, so at the end of the day, you're going to pay Jesus. At the end of the day, you're gonna pay to investors. Okay. So at the end of the day, you're gonna pay to investors through capital markets. So keep looking at the cash flow statement. Looks at the inflow and outflow of cash within a company. If a company business operations can generate positive cash flow, negative overall cash flow isn't necessarily bad. Like this. So if a company business operations can generate positive cash flow, like this. Exactly. So company business operations can generate positive cash flow, negative overall cash flow isn't necessarily bad. Cash flow from financial activity is one of the three categories of the cash flow statement, and the financing activity in the cash flow statement focus on how a firm raise capital and paid back to investor through capital markets. So the large line items in the cash flow from financing activity statements are divided: pay, repurchase of common stocks, and proceed from the issue of debt. Okay. The largest line items in the cash flow from financing activity is a statement from dividends, so paid, so how much money you're going to pay to your shareholders, repurchase of common stocks, okay, repurchase of common stocks, and proceed from the issuance of debt. So the cash flow from financing activity help investors see how often and how much a company raises capital and the source of that capital. If a company cash is coming from normal business operations, it's a sign of good investment. Exactly. If a company cash, if a company, Jesus, if a company cash coming from normal operating operations, that's a sign of a good investment. If the company consistently issuing new stock or taking out debt, it might be an attractive investment opportunity. Again, this is an oversimplification, but it serves as a kind of metric for that. Holy hell. Okay. So to recap here of financial activities, right? Or financial activities. This is the third part of the cash flow statement that focus or this financial activity involved is the company's long-term liabilities, meaning the company's long-term obligations, and equity ownership, and equity and ownership. Exactly. So because of that, Because of this, all right, because of this, all right. So this activity primarily involved is raising capital from investors and raising capital from investors or creditors to fund the company's operation, repay debt, or distribute profits to shareholders. And here are some examples of financing activities. So issuing equity, issuing debt, repaying debt, obtaining loans, payment of dividends. So when a company distributes profit to its shareholders in the form of cash dividends, this represents a return on investment for the shareholders, and it is typically declared and paid by the company boards of directors. Repurchasing stocks. So companies sometimes buys back their own share from the open market or directly from shareholders. This process is known as share repurchase or stock buyback. Exactly, repurchasing stocks. Leasing. Company may enter into a lease agreement. When we talk about leasing, is like a rent, some sort of this. Exactly. Leasing. Company may enter into a lease agreement to acquire assets such as equipment, building, or vehicles. Leasing allows the company to use the asset without taking ownership and can be considered a form of financing activity. Exactly. After all, I don't have any ownership of those assets, but I can use them. Leasing in Spanish is arrendamiento, una renta of certain assets, equipment, buildings, or vehicles. Convertible debt. Some debt instruments, such as convertible bonds or convertible preferred stocks, allow the holder to convert their debt into equity. Okay, allow the holders to convert their debt into equity, share of the company. This provides the option for debt holders to become shareholders in the future. These are just few examples of financial activity. The specific financing activity of a company depends on its capital structure, financial goals, and market conditions. A list of investing activities. Okay. So this section is very interesting. Very interesting. The cash flow, because this is one of the fundamentals of especially being a business consulting freelancer, and to have success as a consulting freelancer is to have cash flow. And I understand what does it mean. The cash flow is the inflow and outflow of that. And by cash flow here, it's important to recognize that in a balance sheet or in a cash flow statement. Okay, so this financial statement review the cash flow from one of these activities: operation, financing, and investing. So operations, investing, and financing. And so understand this, okay? As well as, okay, this comes from the operations, and this is also going to measure is with my own business, okay, as a consultant, all right? When I look at the cash flow statement, when I look at the cash flow statement from the operating activities, my case is like I'm providing as a service to them, okay? So once I look at the net income from the income statement, where you deduct all of this the costs associated earning that revenue, then Yeah, then you can look at the operating exactly. You can look at the operating activities. What it does is to look at the net income from the income statement and add or conciliate with the total amount of cash that was used from other operating activities. Okay, liabilities, obligations that you have to pay, or assets, things that you own that have value. Okay. And the equity, the shareholders' equity, is the amount of money that the investors, yeah, it's the amount of money that the founders of the company invest in the company's stocks. Yeah, that they invest in the company's stocks plus or minus profit or losses since inception. Okay. So with this, okay, and also it's important to put that at practice, especially when you're having a business. That can start as small as you want with yourself. Okay, that can generally start as small as you want, and in this case, it can be as a freelance consultant. And in this case, it can be this as a freelance consultant. Okay, so you specialize in a particular area where you're gonna provide your consulting service and that kind of thing. Uh, and this is part of the operating activities. Okay, and the way how it calculates is that, well, it look at the total amount of cash that was used from other operating activities, as well as the net income with the total amount of cash, with as well as the net income, and adjust to the non-cash items such as amortization, depreciation, and uh, yeah, such as amortization, depreciation, or stock-based compensation, for example. Okay, okay. So when I look now at the second part of the cash flow statement, the investing activities, which generally involves the purchase of long-term assets, like it generally involves the purchase of long-term assets. Okay, uh, such as, well, property, plant or equipment, uh, intangible assets, investment, leasehold improvements. So when you improve a leasehold property, okay, uh, goodwill. That is something involved in the intangible assets. Goodwill. Uh, so these investing activities is so, for example, when you sell some of your investments of your portfolio, well, that is registered. That operation is registered as a cash outflow, right? Uh, I mean that operation is registered as a cash inflow because cash was perceived by this activity. However, if you set if you purchase and, let's say, a property, that activity is registered as a cash outflow. So that's great for investing activities, but when it comes to financing activities, which involve the company's long-term liabilities, obligations, and equity ownership, okay, so this generally involve, according to Investopedia, that This part of the statement focuses how a firm raised capital from investors and paid back to them through financial markets. Okay? According to Investopedia. So these activities, the financial activities, are transactions that involve the company long-term liabilities and equity. So this activity primarily involves raising capital from investors or creditors to fund the company operations, repay debt, or distribute profits to shareholders. Here are some examples of financing activities. So this activity primarily involves raising capital from investors or creditors to fund the company operations, repay debt, or distribute profits to shareholders. So if I keep reading about this, so the cash flow from financing activity helps investors see how often and how much a company raised capital and the source of the capital. So, for example, if I look at the cash flow from, the Coca-Cola, for example, on the cash flow, you got it, on the cash flow. So yeah, if I look at the financing cash flow here, okay, so the cash flow from a financing activity helps investors to see how often and how much a company raised capital and the source of the capital. How much and how often it raised capital from financing activities. Net issue payment. Net long-term debt issue. Long-term debt issuance. Net common stock issuance. Net other financing charge. And cash dividend pay. Common stock divide. Net issue. Cash flow from continuous financing activities. I think it is, right? From continuous financial activities. God damn it, man. Now if I want to look at Apple here, okay, if I look at Apple and check the financials here, okay, operating expense, net non-operating interest income, other income expense, operating expense, selling general administrative, research and development, net income common stockholders, total revenue, operating revenue, and operating expense, selling general and administrative. But this is on the, I'm looking at the cash flow. Yeah, cash flow here, financial cash flow. You gotta be fucking kidding me, man. Holy hell. Holy hell. You are strongly financing. You're strongly financed by them. You're strongly financed by them. Yeah, you were strongly financed. This is the cash flow from operating. And this is the cash flow for Jesus fucking Christ. Holy hell. Okay. Interesting, by the way. Totally interesting. So, the TLDR of the financial statement here is that financial activities involved is the company's long-term liabilities, aka long-term obligations, and equity ownership. And the financial activity the financial activity in the cash flow statement focus, or in the cash flow statement exactly, focus on how a firm or a company raised capital and pays back to investors through capital markets. If a company cash is coming from normal operations, that's a good sign of investment. If the company is consistently issuing new stock or taking out debt, it might be an attractive investment opportunity. The cash flow from financing activity helps investors see how often and how much a company raised capital and the source of that capital. So the financing activity in the cash flow statement focuses on how a firm raised capital and paid back to investors through capital markets. So this is the TLDR of this. Okay, Jesus. So with that, that'll be all for this video. Take care. Bye bye.